What's your biggest concern around this spat between Qatar and its neighbours? And what's the ongoing impact on banks as the spat enters its third month?
Challenging times, but Qatar is holding its credit, sustaining its meritocracy. If you look at the financial stability, the knee-jerk reaction is over. It's stable and functional. Pumped additional liquidity to beef up the local market liquidity. Supply chain disruptions, which was initially there in June, now plan A to plan B. We used to import steel from Saudi Arabia. It's coming from Malaysia. We used to have transshipments from Jebel Ali, Dubai. Now it's Sohar, Oman. So conversion of plan A to plan B is a major operational management that's been effectively getting executed. At the same time, it's 3 months have gone. We need a solution to it. We are trying to understand what's the real issue. Conceptually, there is no breach of universal sanctions set in by Qatar or its financial institutions whatsoever. Whatever the listed United Nations terrorist list, individuals or institutions as defined, we are in full compliance in terms of anti-money laundering framework and combating financing terrorism. So we are beginning to wonder what's the real politics is all about.
We've heard, sir, that from sources that Doha Bank is seeking to raise funds via a private placement of dollar bonds, tenors over 5, 8 and 10 years. And we gather you're holding talks with international banks. I'm getting right to it. Well, what can you tell us? Can you confirm that story?
We have raised our capital, 20% rights issue we did. We procured 1.3 billion Qatar riyals. Now, as a long-term liability, we need to have debt paper as well. So we are talking to bilateral relationships. We can go to public, both subordinated as well as senior debt. It's for this reason I'm here. We are exploring the possibilities, but we haven't formed.
Who are you talking to?
Well, we have a few financial institutions who are long-standing partners. We are working it out.
Yeah, international ones.
Absolutely.
Asia, US, Europe.
All our our relationship across the globe. We are exploring the possibilities to have cost-effective, long-term liability, to have maturity mismatch minimized, and the financial stability is completely under control.
And investors in the Gulf region won't support any fundraising?
No, we have enough cross-border liquidity support, and at the same time, it's better to have diversity. We have a very strong base of source of funds from Asia. We are exploring the possibilities in Europe as well.
So what about the outlook for the rest of the year? Is it affecting your outlook? You've got this expansion strategies. Is there a knock-on effect to your earnings outlook, to the strategy for expanding the bank?
Absolutely. It has impact, not significant. As you know, the rating agencies have responded. They have put an outlook to negative, one notch down. Still, as a AA rated, we are an A-rated bank. Borrowing cost is going up slightly, and that has to be measured and managed and controlled. We have proactive self-sovereign support. We're a well-capitalized bank. We have a good asset quality. We have international footprints. We have enough provision cover. We can see through a good earning again.